Hi there. We are taking you away from U.S. programming for a special interview with Nokia CEO Pekka Lundmark. Nokia shares are trading higher this morning after the firm beat expectations on sales and operating profit in the second quarter. The Finnish telecom equipment maker also said it expects the global chip crunch to abate later this year. Well, without further ado, Pekka Lundmark, CEO of Nokia, welcome to CNBC. Great to speak with you as always. Judging by the share price reaction, investors are encouraged by what they've heard today. Looks like a pretty resilient first half of the year. How would you characterize the latest quarter?
Yeah, hi, Julian. Good to see you again, and thanks for having me. It was actually a great, not only great quarter, but also a very good first half of the year. Hey, look, our margins, our markets are really driven by 5G deployments and fixed broadband, including home broadband deployments, and we have developed for ourselves a pretty strong position on the technology side, which is now starting to come through in our deliveries and margins as well.
Pekka, can you detail for us a little bit more how the 5G rollout is going and how demand for your 5G gear is?
The demand is increasing. We estimate that only about 15% of the sites in the world outside of China have been covered by 5G at this time. At the same time, when we look at home broadband, the number of homes connected or even passed is still quite low in many parts of the world. So we believe that we are still fairly early in the 5G cycle.
How are you doing in terms of market share in 5G?
Our market share has now stabilized. It was a bit on the weak side initially in 5G. Now our technology position has strengthened significantly. We have started to win a lot of deals. Now the market share has stabilized, and obviously the next goal is to start to make sure that it starts growing again.
Let's talk about the supply side of things now. Clearly, throughout the pandemic, the supply chain for chips and for electronics has been really difficult. How is the supply chain right now, and what's your outlook for the second half of the year in terms of chip supplies specifically?
The supply chain continued to be challenging in the second quarter, but we do see signs of gradual improvement during the second half of this year and then in the first half of 23. So it is still a pretty challenging situation out there, but it is improving.
Longer term, do you think that we could enter a situation where we've got a supply glut when it comes to chips? May feel very far away right now, but clearly there's a lot of focus on ramping up production.
Well, we have seen various types of bullwhip effects in the world supply chain earlier, so I would not be surprised. There's a lot of investment going into the semiconductor industry at the moment. We have now started to see a demand for some consumer products actually decline. And if that continues and if the supply continues to increase, who knows, there could be at least a short-term glut.
What are you seeing in the way of pricing and costs? We are clearly in an inflationary environment. What are you seeing, and are you able to pass on higher costs to your customers?
Well, we are seeing exactly that. We are seeing an inflationary environment, which actually for the whole telco industry and communications technology industry is a new thing. We have been used to an environment where actually prices go down every year. What we are, of course, now doing is that in all new deals that we are making, we are taking into account all the updated cost information and expected inflationary development going forward. And the good news is that despite us doing this, we continue to have strong order intake.
Fascinating to see that customer demand is resilient, that your customers are taking these price increases. Can you give us a sense of what to expect in terms of margins in the second half of the year and whether investors can expect margin expansion?
We are maintaining our full year margin outlook 11 to 13.5% comparable operating margin, and we added a little bit more color to it today. We said that we are currently looking at the midpoint of that range. So this positive overall trend that we are seeing is expected to continue.
Pekka, we are speaking a couple of hours away from the European Central Bank meeting. The euro has been incredibly weak versus the dollar, hitting parity just last week. What does the weaker euro mean for Nokia?
Weaker euro for Nokia means stronger top line. We had in Q2 3% growth in constant currencies, but actually 11% growth in reported currencies. We have a lot of sales, especially in the USD. Then when it comes to profit, the effect is much smaller because we are quite well, in a way, naturally hedged. We have almost the same amount of costs in USD as we have sales. So on the profit side, the effect is much smaller.
Pekka, I'd love to round out the conversation just getting your view on the macro backdrop right now. Keen to hear your take on whether you think a recession is coming in Europe or in the global economy more broadly. What is your sense of how the economy is doing right now?
Well, I'm not an economist and I don't have a crystal ball, but obviously the signs are not good at all, and especially in Europe when we are dealing with multiple issues at the same time, not only the semiconductor and other inflation, but also the geopolitical developments, the Russian attack on Ukraine, the kind of consequences of that to the energy market, which are pretty serious in Europe at the moment. There is a lot of clouds in the horizon. We do believe, though, that the telco market, if not immune, definitely not immune, but it will have some resiliency towards weaker economic times because of the need to continue to invest in 5G and broadband and industrial digitalization.
So potentially a defensive place for investors to hide out. Pekka, always a pleasure. Thank you. Pekka Lundmark, CEO of Nokia.